Is making 100 crores possible with a 10 lakhs investment? It is possible as per a strategy by Ramesh Damani. Can it be achieved by everyone? Let's do a deep dive. This is not a clickbait title with some astronomical number. Watch till the end because I'm going to analyze it from a perspective of everyday small investor and provide a big shift in your mindset towards wealth. Welcome to Ultra Profits. I help my audience build life-changing wealth by investing for returns that beat the average and defy expectations. We discuss a strategy to make 100 crores by Ramesh Damani. I will leave the link to that video in the description. According to this strategy, making 100 crores is achievable by starting with a 10 lakhs investment and aiming to double it every 3 years. Assuming a person starting a career can invest 10 lakhs in year 1 or at least in one of the initial years, then by smart investing it can be doubled every 3 years. That is, in year 4 it becomes 20 lakhs, year 7 it becomes 40 lakhs, etc. Assuming the career of a person lasts 30 years, in year 30 it touches 100 crores. Simple strategy and looks great so far. But is there a catch? Now, there are three variables to the strategy. First is the 10 lakhs investment. If not in year 1 of his career, it could be year 2 or year 3. Maybe a delay of 1 year, not a big deal. Second is 24% returns every year. We get 24% from the rule of 72. It says that if we divide 72 by the number of years to double, then we get the target return. 72 by 3 is 24%. Third is invested for 30 years seems realistic. My biggest concern is on the 24% yearly return for 30 long years. You could say that the top performing small cap or a mid cap fund could provide this kind of returns. Can everyone afford to take this risk? Are there any other problems to this? There are challenges with this strategy. The first one is the high required returns. A 24% annual return is significantly higher than the average historical returns of major stock indices. For example, a diversified portfolio often yields returns in the single to low double digits. Sustaining a 24% CAGR requires extraordinary stock picking and market timing. Second is market volatility. The stock market is not a linear journey. To maintain a high growth rate, an investor must navigate bull and bear markets, and the emotional discipline required to hold on to stocks or mutual funds during a downturn is immense. The strategy is highly dependent on long-term upward market trends. Thirdly, risk of failure. Finding multi-bagger stocks, companies that grow many times their initial value, is incredibly difficult. While Ramesh Thamani mentions past success with companies like Infosys and HDFC Bank, for every such success story, there are countless companies that fail or underperform. Could we have really achieved 24% returns in the past? Let's see some instruments. We have 20-year data, which is enough for this discussion. Some of the headline indices. Nifty 50 gave 15.23% returns. Midcap 150 gave 17.7% returns. Nifty Small Cap 250 gave 16.0% returns. All of them fall short of the 24% returns that we aim for. The active mutual funds must have given higher returns than the indices themselves. Some of them, like Sundaram Midcap, gave 18.64% returns. ICICI Pro Value Fund gave 18.19. Nippon India Midcap gave 19.09%. All excellent, but not good enough to meet the 24% returns. So, is this the end of the 100 crore dream? Let us analyze it again with a more real life scenario. Our target is 100 crores. Lump sum 10 lakhs at 18% is 14 crores. 18% seems reasonable with the options that we have now. 14 crores itself seems good, but it is not equal to our aspirational 100 crores. But we rarely invest once and spend the rest of our life. So assuming we do start a SIP of at least 50K and increase it by 5% every year, this is perfectly reasonable. And with the same parameters of 18% and 30 years, we get 67 crores. Now, both put together, we get 81 crores. Suddenly, 100 crores seems achievable now. Crores of wealth is certainly within the reach of many small investors. It needs disciplined and long-term investing. Then the magic of compounding will do the rest. Secondly, while chasing 100 crores, even if you end up at 50 crores, it is still a significant achievement. I want all of us to strive to create this corpus. I repeat, everyone should aim to create this corpus. It just needs belief and focus. The India growth story will provide the high returns opportunities. If this video was able to reshape your mindset about wealth and inspired you, please hit the like button and subscribe. It will motivate me to create more such insightful videos to help you with the wealth creation journey.